So when you're in crypto spring and there's uncertainty, you go to the safest, most secure, most known asset and the most liquid, which is Bitcoin.
Hey guys, welcome back to Library of Wealth. Today we have Raoul Pal sharing his predictions about cryptocurrency and the expected market cycle coming up in May. He believes that the market has already priced in the recession, and everyone in the world is now aware of it. Pal studied previous markets and said that the current trajectory closely follows Bitcoin in 2013, which could result in a bigger spike and then a correction. However, if the market follows Bitcoin in 2018, it could result in a correction that lasts for 6 months. Raoul notes that the Powell pivot in 2018 caused a rally in cryptocurrencies, but the market corrected as the Fed began delivering on rate cuts. He believes that there could be a two-half scenario for the market and says that they're currently underweight, and every hedge fund is afraid to invest right now. Let's get right to the latest interview with Raoul Pal. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
I think it's a very sensible thing, and actually it's setting up for something I think a little more complex that I've got my eye on. Is we've got an issue that staking is going to rise in ETH because it's got a good yield, it's reasonably understandable, so it gives us some sort of risk-free rate within the space. The issue is you've also got the ETH burning, and you end up with a very limited supply of ETH in a bull market. Now, I understand that as the cost of compute goes up, what you end up with is less burning over time, but there is an issue that you could end up with a very squeezy market, and it could be a problem for ETH, actually. The whole crypto market is driven by two things: network adoption, which is the long-term trend, and then in the middle is the liquidity cycle. The liquidity cycle hit a bottom in June, and we started seeing the forward-looking indicators come up, and we've seen already the central bank balance sheet was led by China, Japan, and then the US. That liquidity cycle is in full flow now, so that should continue all the way through till 2025. And that's why we started Crypto Spring. It happens every time we get to this point. So forward looking, the liquidity cycle should continue. And the banking situation is one of the examples of how the liquidity cycle comes in. The Chinese continue with M2 growth, the use of the central bank balance sheet. The Japanese have obviously been using yield curve control. So for me, you know, we're in the right cycle now, and this should continue to play out. Now, within those, you get plenty of volatility. Usually you get 35% pullbacks are pretty common. Is this a 35% pullback we're in the middle of, or a shorter one? Don't know, don't really care. You know, I did all of my allocation. I haven't sold anything ever. I just bought more in June, October, and January, and just used that opportunity into the big sell-offs, and that's it.
But I mean, so are you saying that the fact that the US is threatening that they continue to tighten and interest rates continue to be increased, that's all offset by international liquidity on the one side, and then on the other side, Japan, China, and also you think that the US isn't actually tightening because of the banking collapse and everything else?
Yeah, so the tightening, it's not about interest rates, it's about liquidity. So the change in interest rates is a part of the liquidity cycle, but the central bank balance sheet is the predominant driver plus M2. There is about a 90% correlation between the price of crypto assets and a global liquidity index that we use, which is a function of the G5 central bank balance sheets plus their M2. So look at the central bank balance sheet there with the Fed, and you saw that little spike, which was the injection of liquidity into the banking system, and all assets rose with that. And so, yeah, the interest rate rises are a red herring at this point.
Raoul Pal believes that the teeth of the recession will be this month, and that the market has already accounted for the shift. He notes that it's closely following the patterns of Bitcoin in 2013 and 2018, and now he's expecting a big correction after the Fed starts cutting rates again, with 18% of the entire market in stable coins. Raoul says that everyone is now short on the upside.
It so happened that Bitcoin was launched exactly at the time that global interest rates went to zero. Everybody reset their entire interest rate and their entire debt burden at the same time, everybody around the world. So every country, every corporation, everybody reset rates at zero. It's created, and most of that debt is between 3 and 5 year debt. And what you've got is this 3.5 year cycle to 4 year cycle. And it's a global phenomena, and it was driven by interest rates being zero in 2009. And that is the Bitcoin halving cycle because Bitcoin was launched exactly at that point as well. So the liquidity cycle is the predominant driver. Now, doesn't mean it's wrong to follow the Bitcoin halving cycle because it happens to be the macro cycle as well. And that's all well and good. And if people understand it in those terms, that's fine. But it is actually the liquidity cycle that is global. And it is a complete structural change to the world that happened after 2008. That if you look at the ISM cycle, so the Institute of Supply Managers survey, it is exactly 3.5-year cycles. And we've never had this before. And it's just driven by the debt refi cycle globally. And people will move on the risk curve depending where you are. So when you're in crypto spring and there's uncertainty, you go to the safest, most secure, most known asset and the most liquid, which is Bitcoin. Then you tend to then spill out and you see then Ethereum start to catch up. But as people become more confident in the cycle itself, you see it spread further out of the curve. And you're starting to see that already. I mean, Solana had a huge run this year. There's a few things that have had a huge run. It's not consistent yet. So it's very common that the Bitcoin dominance falls. It's the same in the credit market. People buy treasuries first, then they buy corporate credit, then they buy junk bonds, then they all blow up and we start all over again. I mean, it's a standard way that we operate. So it's very common. So crypto's no different than financial markets. I did a lot of work on Metcalfe's law, network effects, and how to model it. And I found that really most of it is explained by two factors only. One is number of active addresses, and the other is the value exchanged on chain. So those two pretty much match price. So what Dan's saying is right, and what Melton's saying is right, is you need activity on chain. It's not just the active addresses. As long as they're doing stuff, the value of the network increases over time.
With the current level of uncertainty in the market, Pal knows that the fear of missing out can be overwhelming, but he has learned from past experiences not to sell too early. He believes that 2020 was a great year for accumulation, and 2021 was the year with choppy and volatile phases that set the stage for what's to come. Although 2020 was a reset year, Pal agrees and notes that he always tries to think about all the possible outcomes. One of those is the complete and unexpected trajectory straight up in the market. He thinks that everyone would care in the short term, much like in equities right now, but all the long-term data shows it would be a pure problem for everyone. While Raoul does not know the path of the market, he is currently accumulating and waiting to see what's happening in the next 30 days. What do you think about Raoul Pal's prediction for the crypto market and where we're headed in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is the Library of Wealth. We'll see you in the next video.